right.
Good evening, everyone. Welcome to Sequoia Lending's weekly training. We are going to talk about compensation plan. And as you can see, this is actually the 5th version of our compensation. And you can imagine when we started the company up to today, there are multiple revisions to the compensation plan already. The whole purpose for us to keep fine-tuning the comp plan is to get it better and better and better and attract more and more people into the company. And also the main purpose is to keep people in the system and also keep people to start building the organization within Sequoia Lending. So without further ado, let me dive into it. Just like any other company, compensation plan is very, very important. We put a lot of thoughts into it, how to make it work, how to make it attractive, and most importantly, how do we put more money into your pocket? Into your pocket, there are 2 ways for you to generate income with Sequoia Lending. The first one is obviously using your own effort by generating your own deal. Now, however, this is not what we want everybody to do. We don't want you to become a Rambo, just go out there to do things on your own. We actually want you to build an organization within commercial lending. I think this is the only platform out there allows you to do something like this in commercial lendings. Okay, so now besides of your own personal production, you can actually generate incomes or override what we call through the effort when you build your organization. So we are going to talk about all these compensation plan tonight and how you can get paid. So obviously the first thing, it's the referral commission. Okay, we're going to talk about what referral commission means. We are going to talk about personal commission. Very obviously, when you bring in your own deal, when you close your own deal, how much do you make personally? Now, this is the game changer. We have something called roll up revenue share. Roll up revenue share. We're going to spend quite some time to explain or talk about this particular one because, again, we understand in commercial lending, many of us come into this field are part-timers. 99.9% of our agents in this company have their other obligations, such as a realtor, insurance agents, whatever that might be. So commercial lending might be just your part-time income producing incomes. So how can you, if you do not have your own personal production, how can you still make money by using our system? So that is what we're going to talk about. And last but not least, we are going to talk about the bonus pool. Okay, so let's dive into it. Number 1, let's talk about how commission is generated in commercial lending. Just like any other services or professional services, we make our commission by charging points. So if you're a realtor, you understand. Let's say if you're a realtor, normally when you sell a house, you charge 6%. Well, that's in the old days, but probably today you're charging anywhere between 3 to 6% for selling that house, and you share that 3 to 6% with your selling agent, right? So let's use 6% as an example. You make 3% and the other agent makes 3%. So if you have a $1 million property, you charge the client $60,000. So you make 3%, which is $30,000, and the selling agent makes $30,000, 3%. So that is how we make money as a professional a service provider. So same thing with commercial lending. So what we do is that same thing, we charge points as well. So using this example, we are going to use the example throughout the presentation of this presentation. Now, regardless what product that you sell in Sequoia's platform, you can sell 1 to 4 investment property, you can sell a construction loan, you can sell a warehouse or working capital. It doesn't really matter. All it matters is that how many points that we charge and what is the total commissions that comes into the company. So in this example right here, we're using an example loan amount of $1 million. So let's say we charge 2%. Now, many agents asking us, do we have to charge 2% every single deal? No, we don't. Okay, it really depending on the size of the deal and the complexity of the deal, and we determine how many points that we charge. So for example, let's say if you have a working capital for about $10,000. So in that case, we can charge 10 points. So 10 points of $10,000 is what? It's only $1,000. Now on the other side, let's say you're working on a big project, let's say a $50 million construction project. You're not going to charge 2 points for a $50 million project. So normally for something like this, you charge 1% or 1 point. 1 point on the $50 million. That is $500,000 commission, ladies and gentlemen. So that is what we are talking about right here. So please understand one thing: commercial lending is nothing like anything that you've seen out there. So we are selling big ticket item right here. It's very, very easy for us to run into deals like million, 5 million, 10 million, 15 million. So again, back to this example. So let's say in this particular one, we are using $1 million loan, and we charge 2 points. Okay, so 1 point is 1% of the loan amount. So 2 points is 2% of the loan amount. So in this case, it's $20,000. All right. Now, how is this $20,000 divided? So Sequoia, as a company, we do have our overhead. So out of this $20,000, we take 30% of it as our overhead. We need to pay for our processor, pay for everything in the back end office and things like this. So we pay our 70% to the field. So that is what we call the net revenue. So you can see out of that $20,000, $14,000, it's a payable commission to the field. Okay. So that it's what all the agents going to share that $14,000. So now let's talk about how you get paid. The first level you get paid is what we call a referral commission. What is a referral commission? Referral commission basically means that, hey, I am a realtor, I'm a loan officer, whatever my profession is. I don't have the time to deal with the client. All I wanted to do just to throw this client to the Sequoia platform, and that is the end. I would just sit back, relax, and waiting to collect my paycheck. Okay, if that deal closed. So in this case, meaning that all this agent does is just to refer a client to the program. Now we pay 23% of the commission. So give you an example, very easily use the same example. Total commission is $20,000 as we show from the last slide. So this referral fee, it's 23% of $20,000. So without doing much, just by referring the client into the platform, this agent makes $4,600. One deal. Simple enough. This agent does not need to talk to client. This agent does not need to collect documentations. This agent does not need to follow up with anyone. He doesn't even need to talk to the any processor in the back office. All he needs to do is to submit this deal through his own website, and we have a record out of it. So every time when a deal closed, we know exactly which agent submitted this deal, and that agent will get paid. And how soon they get paid? Normally they get paid within 3 business days after the company cleared the commission. So for example, let's say if do real estate commission transactions, most of the time we will get paid at the same day as the closing. But in some cases, we will get paid after the transaction is recorded with the county. Then we will get paid. So regardless when we get paid, once Sequoia receive the commissions, if they wire the commissions to us, that check is going to clear pretty much on the same day, and you will get paid 3 days after that. Okay, and we pay every single week. So again, that is referral commission. Very, very simple. Remember, you got 23% out of it. However, if you want to make more money, how do you make more money? If Now, if you decided to, you can do a little bit more work. You can follow up the project. You can collect documentations. You can set up meetings. You can become the bridge between us and the client, and anything that we need, you will jump into it and help us out. You will get 46%. Your commission will double immediately from 23% to 46%. Now, you see there's something called Sequoia certification class. Now, understand one thing. In commercial lending, there is no licensing required. And I say it one more time, there's no licensing required. Now, how do we control the quality of our client, of our agents? So now we come up with the Sequoia certification classes. As we speak, we are in the process of building this library of classes that every agent, you need to, if you want to make the 46% commission, you need to take this class. You want to make sure that you understand the basic, how to collect documentations, how to submit the deals to us, how do you follow up with clients, so on and so forth. Now, to most of our agents, I don't think that will be difficult because most of us are already professionals. We are realtors, we are loan officers, we are insurance agents. You already know how to collect a lot of these documentations. You already know how to follow up with these documentations. So again, I don't think that will be difficult for most of us in this on this platform. And it's just only some people, they just do not have time, then they will just do the referral. Now, the question is, if I just a referral agent, I only get 23%. So who make the other 23%? Well, you have either you can select somebody in the company that you trust and you work with that person and you tell the company saying that, hey, I want John Doe to work on this deal with me. Send this deal to him. So now we will assign your deal to John Doe, and from that point on, you don't need to worry about anything, and John Doe is going to take care of everything in the back end. So at the end, you make 23%, and John is going to make 23%. Now, if you do not specify who you want to work with, that is fine. Then now the company is going to assign that deal to one of our agents or one of our processors to follow up this deal for you. So that person is going to make 23%, whoever that person is helping you out. So now if you do everything on yourself, by yourself, your commission double to 46% using the same exact commission level. $20,000 comes in, you make 46%. In this deal, you're making $9,200. Just one deal. Okay, so now this is the personal commission. Now, the way that we set up is that we want to give you maximum. We want to give you as much commission as possible because we understand one thing. In commercial lending, it's not like you're selling other product that you have client every single day. Okay, so commercial lending to a lot of us, probably I would just got one deal every 2 months, one deal every 3 months. It's fine. And that is why we don't want you to climb up the ladder. What does it mean? There's some other company out there. For example, if you are with probably I don't know, insurance company, for example, if you walked in, you have no experience whatsoever, they start off you with a very low commission. And now the more you do, then they will move you to the next tier of commission and so on and so forth. And so you have to do a lot of transaction before you get to the maximum commissions that you're allowed to make. Here is totally different. We want to give you the maximum personal commissions that is out there. So you don't even have to fight for it. Whether you do one deal, you do 10 deals. Now, the reality is that we have not yet seen anyone as a superstar in the company, meaning that some people come in that, hey, I can do 100 deals this year. I've never seen somebody. The average that we see, honestly, the average that we've seen is one deal every 2 months. Okay, that is the statistics so far. Now, obviously, as more and more people coming into the company, coming into the platform, coming into the system, that number will change. But at this point, that is what we're seeing out there, and that is how we structure the compensation plan based on the statistic that we see. Now, there's a lot of what if. Now, when that day come, then I will guarantee you there will be a comp plan 5.5, 6.0, 6.5, etc., etc. Okay, so at this point, personal commission, just remember you are making 46% of the total commission, whatever that might be, and your job is just to follow up, collecting documentations, set up meetings, and that's it. You do not talk to the lender. You don't need to talk to title company. And well, sometimes you do need to talk to title company because some agent wants to have control, which is totally fine. But most of the time, you don't need to talk to title company. You don't talk to insurance company. And all you do is just to collect paperwork for us. And you make 46% of the total commission. Okay. So now let's moving forward. It's simple enough. I mean, we believe in one thing. We don't want to make the compensation system so complicated that you don't even know how to, calculate your commission. So now, again, very easy number, 23% if you just do a referral, 46% if you want to take the whole deal. That is based on your own personal effort. Besides of that, we do have a team system that allow you to generate income by building a team or by building an organization within Sequoia. Just like many other real estate company out there, you walk into a real estate company, you can become an agent by yourself. You can just sell houses by yourself all day long. Nothing wrong with that. But to some entrepreneur, to some people that have more ambitions, they can walk into a real estate agent and saying that, hey, I want to become a stockbroker. I want to build my own office. I want to build my own brand. I want to build my own branch. I want to build my own business within that business. Absolutely. So whatever they do, whatever you build within that company, you will have a percentage out of it. So same thing with Sequoia. That's what we allow you to do to build an organization. And the reason behind it is that, again, there's no licensing needed. Very easily, you will run into agents or clients or partners that want to be in commercial lending. In my other training I talked about, there are a lot of people have no idea where to find people like you and I. There's so much need out there for commercial lending, but yet so many of these business owners, other than the bank, they have no idea who to turn to for that working capital, for the construction loan. 9 out of 10 business owners walk into a bank trying to get funding. 9 out of 10 is going to walk out empty-handed. And those are our clients. Okay, those are our clients. Now, because if there's no licensing needed, you will run into agents all over the country might want to become your partner, to come in here to do the deal together with you, or even do the deal themselves. So it's very easy for us to build an organization within Sequoia. You're in California right now. You're in Hawaii right now. You're in New Jersey right now. It doesn't really matter where you are. I bet that you know people all over the country that once you start sharing with them about commercial lending, they will be drilled about what you're trying to do. And many of them will have that, they would listen. They would love to listen more from you, what you have to say about commercial lending. So again, bringing them into the organization is not that difficult. So now we do reward you for getting people into the organization. So this is how it works. Revenue share. The first level, you will get 10% of the first level. What does it mean? So let's say I am Alan. I recruited John Doe into the company, and John makes that commissions, and he bring in the deals. He bring in that $1 million deal, $20,000. He make the $9,600 out of it. What do I got out of it? As me sponsor John into the company, I make 10% of the total commission. So the total commission is what? $20,000. So in this case, I will make 10% out of it, which is $2,000. And I'm going to go into detailed example in the last in the next few slides. Now, we also do not want to have lazy people coming into the company, sitting in there and don't do anything and expect to, have all these override coming in. So we do set up some sort of guideline. So if you look at the personal qualification loan consultant needed, meaning that in order for you to have override, you have to have at least one person. Am I right? That's very logic. If there's no person underneath of you, none of these things would matter. So if you can bring in one person, and this person is a qualified loan officer. Now, what does a qualified loan consultant mean? I'm going to talk about in the next slide. But anyway, so if you have one qualified loan consultant by yourself, you trigger the first level, and now you can make the first level commissions, which is 10% override. Now, if you bring in 5 or more qualified loan consultants, now you trigger the second level, which is 5%. So on and so forth. The third level, we pay 3%. The fourth level, we pay 1.5. Fifth level, we pay 1.5. Sixth level, we pay 1%. So meaning what? Meaning that in your entire career with Sequoia, all you need is just 40 qualified agents in your organization so that you can trigger all 6 levels of compensation that is stated on this slide. Okay? So now let's move on. What is qualified loan officer mean? Because obviously we don't want a whole bunch of people recruiting a whole bunch of people coming into Sequoia and nobody generating loans and nobody would make money. That is not what we wanted to do. We want to see production, and that is why this platform is not for people that have a wrong impression where I just come in and recruit a few people and I disappeared and I can make a lot of money out of it. Okay, so what is a qualified loan consultant? Number one, you have to be a member of Sequoia, meaning that you have to sign up with us. Okay, you have to use your platform. So if you don't even use your platform, you cannot even submitting deals. How can you generate the override, or how can you build a team? So the number one thing is that you need to become a member, and that's just reasonable enough. Now, the second thing is you need to have at least one workable loan, or any agent need to have one workable loan every 6 months from the time you joined the company. What is a workable loan? Now, pay attention. I'm not talking about closed loan. That's not what I'm talking about. I'm talking about workable loan, meaning that, hey, let's say somebody buy a warehouse. You submitted a deal. Our team look at the deal. We price the deal. We talk to the lender saying that, yes, this is a good deal. This is my offer. And they will issue something called a term sheet. Okay. Now we presented the term sheet to the client. The client looked at the term sheet saying that, yes, I agree with this term sheet. I signed the paperwork. I signed the term sheet, submit it back to us, and then they start sending documentation to us. Now that is a workable deal. Does it make sense? We don't need to close this deal. Now this deal there are many reasons that the deal cannot close. So for example, let's say while we're doing the underwriting, now all of a sudden we realize that, hey, this property has a lot of mold in it. Now the client doesn't want to buy this property anymore. That's fine. It's still a workable deal, right? Or for whatever reason, doing the underwriting, the client's credit score dropped. Now he cannot qualify to get the deal. It's okay. This deal was still a workable deal. Okay. Now, what is not workable is that you just submit anything to the company and it just doesn't make sense. For example, somebody saying that, hey, I need $50 million to build a hotel, and he has no experience whatsoever. Now, this is obviously is not a workable deal. Or somebody coming here saying that, hey, I need $100,000 working capital, and I just opened my business 2 months ago. It's not a workable deal. Okay, so we will tell you upfront what is workable, what is not workable. And another example of not a non-workable deal is that somebody submitted everything looks good. Now the lender saying that, hey, let's move forward and give me the documentation. Now the client never submit any documentations to us. So for example, let's say somebody, again, using an example that he's saying, hey, I need $5 million to build to have a development, to build a development. Okay, we will ask him for construction budget. We will ask him for track record, experience. Show me what you have done, right? Now, if they cannot show us the documentations that we ask for, then it's not a workable deal. Okay, so it's very simple. All we have to do, a qualified loan consultant, is number one, active member on Sequoia, and one workable deal every 6 months. Now, what if somebody saying that, hey, I just joined, and now in the first month, I already have like 3 deals that submitted in. Congratulations. For the next year and a half, you are qualified. Or somebody saying that, hey, I submitted 4 deals. Very good. For the next 2 years, you don't need to worry about. And all you have to do just to focusing on building the organization. So I think this is the minimum requirement that we put it out there. Now, as time move on, we might need to raise the bar because more and more people coming into the company. And again, we do need to have some sort of standard. But right now, as we start, and as I mentioned to many of us, Sequoia, right now, we are at the very ground floor right now. We just launched this thing. Now, the company, we have been doing commercial loan since 2008, okay? But for running a system like this, we are at the ground floor. And that's why we want to have the minimum standard for everyone on this platform. However, don't just stay at the minimum level. Okay, I know a lot of you can do a lot more things than just 1 loan a month. We have a lady out of Hawaii. I don't want to name a name. She came in. She already submitted like 4 or 5 deals in just 1 week. So again, we do not care about what the size of the deal. Okay, it could be just a ERC, Employee Retention Tax Credit. Okay, or it could be just a $50,000 working capital, or it could be just a $20,000 equipment loan. I don't care. The whole purpose for everyone is that come in here, start getting into the habit of generating loans. And because there's not much competitions out there, and we want you to go out there to become the focal point of your community, the go-to person of your community. So I bet you in your circle, when you're talking about real estate, I bet you in your circle somebody's already the focal point in your community. You talk about insurance, there's always a go-to person for it. But how about commercial loans? How about commercial lendings? I want every single one of us in this room to be the focal point. When people think about in your community, when people think about commercial lending, they will go to you because you have the ability to get the deal closed, to get the funding that they want. But how do you do that? You have to let them know. You have to let people know. And once you let people know, generating 1 deal in every 6 months, it's not difficult. And honestly, that is the minimum, that's the lowest standard that we can go to. Okay. So again, that is what a qualified loan consultant is. And if you can do that, back to this slide right here, now you can qualify to, get every single level of this commission, as long as you also, sponsor that the number of qualified consultants that according to this slide right here. Now, this is the interesting part. What if I cannot do that? There's so many reasons I cannot follow this guideline. In many other companies, we see situation like this. Somebody joined the company, very excited at the beginning, bring in tons of people. Now, all of a sudden, for whatever reason, the fire is gone. Because due to their work, or perhaps personal issues, or some other opportunity that came up, whatever that reason might be, they cool down, they slow down, they disappeared from the organization. Okay. Now, in many other companies, these people will be out. They would not, no matter how big a team that they build, the company is not paying them for anything that they have done in the past. And we believe in Sequoia, we believe that is absolutely, totally not fair. Because of John came into the organization, he was excited. He brought in Mary into the company. And for whatever reason, John, it's temporary, we put it this way, temporary out of the business. But Mary is continue to grow, continue to expand, continue to build in this organization. And Mary built a huge team underneath of John. Now, without John, the company would not be able to get to Mary. So by not paying John anything, it's absolutely not fair. We do not believe that. But yet at the same time, we also believe that John is out of the picture already. It's not right for us to pay him 100% of the override that he used to deserve. So what is the solution? The solution is that we will still pay John regardless where he is for 25% of whatever he's supposed to earn. That is what 25%. Okay. Now, what happened to the other 75%? The other 75% is going to roll up. That is what we call the roll up revenue. To roll up to to John's sponsor. Perhaps John's sponsor is Bob. Bob is still in the business. Bob is still continue building. So whatever that 75% commission that John's supposed to make, but because it's not in the company anymore, that money will roll up to Bob. That will encourage Bob to continue to build more business, continue to be active in the company. Okay? So now, I know a lot of you might be confused. So let me share with you some example, and hopefully this can clarify a lot of confusions. So let me give you an example. Example number one. So now you see Aaron is the leader, and he sponsored Brenda and Brian into the organization. So in this case, Brian is the agent that brought in that $1 million deal. So that is the $20,000 that Brian bought in. And Brian, because this is a personal deal, so Brian makes $9,200. Now, in this particular example, Aaron has one walkable loan. He also has one personal qualified consultant. So now Aaron is qualified to get the first level of override. So that is 10%. So in this case, Aaron makes $2,000 out of the entire commissions. Simple enough. Now let's move on to the next scenario. Scenario number two. Same thing. Look at the graph right here. Now, Aaron still sponsors Brenda and Brian. Brian sponsors Cindy, and Brenda sponsors Chris and Crystal. Okay? So now this is what the tree looks like. Now, in this case, Cindy is the one brings in that $1 million deal. So to Cindy, she makes $9,200. No questions, right? Now, in this particular case, Brian also has one walkable deal, and he also has one qualified agent underneath of him, which is Cindy. So Brian makes $2,000. Okay? Now, let's look at Aaron. So in order for Aaron to make 5% second level, if you look at the number right there, second level is 5%. He's supposed to make $1,000, right? Now, in order for him to trigger the $5,000, he's supposed to have 5 personal qualified loan consultant. But in this case, how many qualified loan consultant he has? He only has 2. So now, hey, nothing wrong with that. A lot of people decide not to build, which is fine. So in this case, he's not qualified to get the full 5%, which is the $1,000. But however, we still honor what he does. So in this case, Aaron will make $1,000. He's supposed to make $1,000 on second level. But now he's not qualified to make that 5%, but we still give him 25% of whatever he's supposed to make. So now in this case, he make $250. So in this level, Aaron could have been out of the picture already. Probably he no longer interested to do commercial lending. It does not matter. As long as Aaron is in the platform, he does not cancel his membership fee. As long as he's in the platform, we still see him in the system. as long as he does not cancel his own account or membership fee or whatsoever, he will continually to get 25% of second level. That is including third level, fourth level, fifth level, and sixth level. Okay, now let's move on to the third example. So third example, same thing. So in this case, now Cindy is still the one that brings in the deal. So Cindy still make $9,200, no question about this. However, in this scenario, Brian does not have a walkable loan. Brian just decided to bring Cindy in and he disappeared. However, just like the last example, we need to honor what Brian did because he bought in Cindy. So now we still pay 25% to Brian. Now, Cindy, it's Brian's what? First level. So he's supposed to make $2,000 if Brian was able to bring in that one walkable deal. But in this case, we still pay him 25% of $2,000. So now Brian makes $500. Okay. Now, what about Aaron? So in this case, you see, Aaron has one walkable loan, and he also has 5 personal qualified loan consultants. That is Bobby, Becky, Benjamin, Brenda, and Brian. So now Aaron has 5 personal consultants that are qualified. So in this case, Cindy, it's Aaron's second level. So Aaron's supposed to make $1,000. But because Brian did not qualify to make 100% of the 2,000, he only made 25%. The other 75% of the 2,000 goes to whom? Goes to Aaron. So in this case, Aaron is making $1,000 plus $1,500. So he is making $2,500 override from his team. So why are we doing this? What we are trying to do right here is to encourage everybody to stay in the program, encourage everybody to build an organization because, hey, you never know. I would bet somehow, somewhere down the road, there are people in your organization that just disappeared. That 20, yes, he will make the 25%, but the other 75% will just keep rolling up, and most likely you will capture. If you qualify what you're supposed to do, you will capture a lot of those commissions. Now, for the other person who decided not to stay with us, we don't just kick you out of the company, just like any other organizations out there. We do not do that. You will get paid forever as long as you stay as a member of Sequoia. Now, obviously, if you decide to quit yourself, cancel your account, let us know that, hey, I no longer want to do this. That's another story, okay? But as long as you are in the system, you will get paid. And you would never know how big your organization can become in the next 5 years, 10 years, whatever that might be. Okay, so again, we spent a lot of time to come up with this comp plan right here that we think is beneficial to everyone. Even though you're not trying to build, you still get a percentage of what you deserve. But for people that is willing to build, put time into it, put dedication into it, you will make a lot more money than you can imagine. Okay. So that is revenue, and we will have a question and answer a session after this. So this is the override. This is the revenue share, and I hope that you can see the picture of it and you can see the potential of using this comp plan. Last but not least, this is what we call the bonus pool. So for every single deal, we will reserve 2% of the commission for every single file and put into this bonus pool. So this bonus pool is across the board. It does not matter what team you are in, does not matter what branch you're in. It's the entire organization. So every single deal that is closed, we will reserve 2% into this pool. Now, what is this pool used for? This pool is used for contest, used for promotion, used for trips, used for gifts, whatever you want to call it. So for example, last year we have, throughout the year, should put it this way, we have a lot of contests like this where if you generate a particular loan in a particular period of time, besides of your commission, you will also get an extra bonus, extra $1,000, extra $500, whatever that might be. So everyone who qualify will share this bonus pool. Now, how often we do this bonus pool? Normally, we do this bonus pool whenever we reach to $3,000. We need to have enough money right there to attract people, right? So once the bonus pool reaches to $3,000, then we will announce the next contest. And as the pool is getting bigger and bigger and bigger, and then we can definitely do a lot more things in the future. So again, ladies and gentlemen, this is the Comp Plan 5.0. We put in a lot of thought into it. We put in a lot of effort into it. We consulted with a lot of reputable company in the industry to come up with something like this. And this is how you make money. Okay, so now the presentation is over, how to make money. So I'm going to stop the recording. And if you have any questions, feel free to ask.